Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. The Senate crypto bill faces a critical deadline as lawmakers schedule a markup vote for January 15th, despite ongoing partisan disputes. Senate Banking Committee Chairman Tim Scott is pressing forward with negotiations on the Digital Asset Market Clarity Act, but several major sticking points remain unresolved. Democratic negotiators are pushing for ethics standards to prevent senior government officials from profiting from digital assets, constraints on decentralized finance platforms, and limits on crypto yield offerings. Republicans and industry advocates are concerned about provisions that might restrict stablecoin yield through the Genius Act. With a January 30th federal spending deadline looming and 2026 midterm elections adding political urgency, the timeline is extremely tight. Industry executives from Binance.us, Crypto.com, and other major platforms are conducting a lobbying push, but observers warn that proceeding without bipartisan agreement could doom the legislation's chances of passage. In major relief for crypto treasury companies, MSCI announced it will not exclude digital asset holding firms from its global indexes following the February 2026 review cycle. This decision removes significant near-term risk for companies like Strategy, formerly known as MicroStrategy, which saw its stock jump approximately 6% in after-hours trading. Strategy holds over 673,000 Bitcoin and faced potential forced selling pressure from passive index funds if MSCI had moved forward with exclusion. Tokyo-listed Metaplanet also rallied, gaining nearly 9% following the announcement. The decision affects billions of dollars in passive capital flows and validates the business model of companies treating Bitcoin as a strategic treasury asset. Bitcoin ETFs roared into 2026 with over $1.2 billion in net inflows during the first 2 trading days of the year. Monday alone saw $697 million in inflows, the largest single-day total in 3 months. BlackRock's iShares Bitcoin Trust led with $372 million, while Fidelity's Wise Origin Bitcoin Fund added $191 million. Bloomberg ETF analyst Eric Balchunas noted that if this pace continues, annualized inflows could reach approximately $150 billion. Bitcoin is currently trading at $92,059, with Ethereum at $3,219, XRP at $2.25, and Solana at $137.84. On the institutional front, Morgan Stanley filed registration statements with the SEC for spot Bitcoin and Solana exchange-traded products. With $8 trillion in advisory assets under management, Morgan Stanley's entry is expected to significantly broaden crypto access. Bank of America also officially launched cryptocurrency recommendations for wealth clients, suggesting modest allocations of 1 to 4% for clients comfortable with volatility. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.